All right, good morning, everybody. So today is the first day we've got after the Fed meeting. Fed meeting was a big one. So basically, I've been screaming from the rooftops that the hikes were coming. Didn't know, if they were going to full on announce them yesterday, but they did. Gold was selling off basically in a high inflation environment. In high inflation environments, gold typically goes up as the inflation hedge. Since gold was selling off before the inflation or before the hikes or before the meeting, that basically looked to me as if the gold was basically pricing in a rate hike. Now, a lot of people are looking for bearishness in the S&P 500 and Bitcoin and all of these other risk assets because typically high inflation rates do mean or usually mean, or not inflation rates, but high interest rates usually are bearish for risk assets. This is the thing, guys. Investors are more concerned with inflation than they are with higher interest rates. The Fed can hike a few times to get back up to its standard or 2%, right? And the markets are okay with 2%. Obviously, the markets love the fact that they're going to hike as early as second quarter 2022. They got 3 hikes planned. That doesn't mean all 3 hikes will happen, but they have 3 hikes planned for 2022, 3 hikes planned for 2023, and 1 for 2024. Obviously, that all can change quickly, right? So right now, what are we doing? Well, let me get this back on there. Give me 1 second, just so people know what I'm looking at. So right now, what we're looking for is, well, the markets took a very bullish posture. Let's go look at the XLK, as that's tech. So we had a couple days of sell-off before the actual meeting, and then boom, yesterday's meeting happens. You get a nice big bullish pop. This is all-time highs for tech, so tech's loving it. Most of your markets are bullish. Everything was bullish yesterday. You had a big pop on the euro. The DXY falling into a possible area of support. So we did get that daily breakout on the DXY. So I was kind of looking for continuation. Then the rate hikes happen, and then it's right back into this wedge. So basically, first area of support would be looking at 96.05 on the DXY, this bearish candle there, and then ultimately 95.89. So I am assuming that this is going to fall down a little bit further. The markets are not gonna. I'm assuming this is just my opinion, but I am assuming that the markets are not gonna have a bearish reaction until we actually get closer to when it's time to start doing the actual rate hike itself. So right now, though, you got to do what the markets are showing us. You have to trade price. You can't let your own bias influence your trading decisions, because no matter how much you think you may understand fundamental analysis, like what rate hikes are and all this other stuff that has to do with the fundamentals, that does not mean that the market is going to act in the way that it should based on the fundamentals. I listen to fundamental guys all the time, and they're wrong just as much as the purely technical guys, right? Just as much. So, like I'm wrong sometimes, the market does exactly the opposite of what I'm looking for. Well, that happens to the best fundamental analysis guys in the world. Same exact thing. It's what the market does is basically dictating what the market wants. That's who we have to follow. We are price action analysts, so we will follow price. First thing that I'm looking for this morning on the Euro USD is a pullback. There is no support level. Here is your open. You are well above that. You can see you're 0.15% off the open today. Nice big bullish pop after the London Open. So basically what we're going to watch in front of the New York session is we're going to look for this thing to pull back into support. First area of potential support that I found is on the 30-minute time frame at one spot 13054. Now it can be the Heath level, the top of that bearish candle, or the open of that bearish candle, I should say, one spot 13054, and it could be as low as the close of that bearish candle. All in all, I'm looking for that level to act as some sort of support. Is it possible that it finds support right here at the wick? It is, but that is not how I would take a position on this. My first target ultimately would be the daily high, which is right there, but this would be my target. my ultimate target on the Euro USD, 1.13241. So basically what I want to see, moving ahead, I want to see Euro pull back into this 1.13 level. I want to see that it's going to act as support. I'm going to take a bullish entry there, and I'm going to be targeting that as a secondary target. Once we get up into daily highs, then I will remove some of my position, and then if it pushes on up into that, then I will take off the rest, leaving one small piece on to potentially catch a reversal. All right, so here is the main chart on the Euro USD. It's a bad one. It's been getting sold off for quite a while, right? So basically, it's extended to the downside. I mean, it doesn't matter what indicator you look at. You can see that you do have bullish divergence forming here on this thing, though. Well, no, you don't. Not quite. This low is higher than that low, so, or lower. So, and then this hot low is higher than that. So there's a little bit of divergence on there, but it's all good. So basically, yeah, we're going to look to see if it pulls back. If it doesn't, if it finds resistance up there and then starts to roll over because it wants to go lower, then we'll attack it to the short side. But for today, I'm going to be looking for the bullish entry on the Euro USD, and that's pretty much going to be the same across the board. Here's the pound. The pound doesn't have anything inside of that big candle there to look for potential support. You can see that it's just been straight up since. Going to smaller time frames, the next nearest one would be old resistance, roughly about there. So 1.32668 doesn't mean it has to come down there. Obviously, it can turn around anywhere, right? Because on a smaller time frame, too small that I can even go down to, there might be something in here for it to find support. We know that there is, because anytime you have a wick on any time frame candle, that means on a smaller time frame, that's going to be a bearish candle. So like potentially on a 1 minute, this wick up on the 5 minute chart, that could be a bearish candle on a 1 minute time frame, right? So yeah, it's looking like it's trying to find support right here, but I wouldn't ultimately look for that to hold. I'd want to see it come down a little bit deeper, but it's obviously going to do what it wants to do. It's finding support at this 5 minute swing high right there. That's where it's currently finding support. I would not be taking bullish entries from here, though. And like I said, this could be just an initial risk move for the risk markets, and then the markets could decide that they don't like the news in 2 days and start rolling back over. That's the beauty of following price and trading price, because we don't have to know what the market's going to do. We could simply look at price and find high probable entries and execute those positions, and some are going to be right and some are going to be wrong. That's just the way it is in trading. So yeah, that's that. I'm not really looking at the pound dollar. It is into daily resistance though, so make a note of that. Daily resistance is 1.33035 on the pound dollar. Let's go back to the Euro USD because I didn't see it there. Yeah, it's in the daily resistance as well. My target is the daily resistance. There's daily resistance, and my target is just above daily resistance. So to be safe, if it does pull back and if it does look to run higher, to be safe, I would probably go ahead and take off 2/3 of the position ahead of that, because that is daily resistance. But this, that wasn't a massive move either yesterday on the news. I mean, look at this day's candle. That range is way bigger than this one. So we'll see what happens. Typically, rising interest rates is not necessarily bullish for indices. It's usually bullish for the dollar. And since the dollar is pulling back, we have to be cautious. The DXY did break out of that bull flag, if you want to call it that, or a rising channel, or whatever you want to call it. It's been absolutely extremely bullish. Came into here, found support, and that support held 95,891. Then you got that pop out of this descending trend line, daily close above. Next candle set in a new high, and then boom, closed below the open of the breakout candle. That typically means that the breakout candle is indeed a trap. You are moving lower. Is it possible that it finds support at the Heath level or demand zone instead of at the actual support level? It is, right? That demand zone is 96,215. So you are potentially into a spot where it can absolutely find support. All right. But as that as that is, I'm still going to be looking for long entries on the euro. S&P 500 is pushing up almost at all-time highs. Almost at all-time highs. So my question to you, which is also the reason why I'm looking for bullish entries on the euro, do you think that price is going to put in this kind of a move, get a close at resistance, trade up above resistance fairly far, and then roll over without taking out that liquidity? No, that's happening, right? That is happening. I don't know that it happens today, but that is happening. This will get taken out before you see any bearishness on the S&P 500, if you even see any bearishness on the S&P 500. That is your all-time high, right? You are knocking on the door. So basically how I would look to trade that is I would look for support, right? Find support somewhere, and then 47, 44 would be my day trading target, all right? But it's not looking like it's going to give an opportunity. I would not take a long right here. Absolutely not. I need it to be down at some sort of support. Lower than that, 30-minute support is 47.31. And then this one is 47.21. I mean, any one of those two areas could potentially hold, but it looks like you're not even going to get a pullback before it finally breaks. But I am looking for that to be taken out, right? For sure. U.S. oil loved the news as well. I mean, everything loved the news. Everything. Big, strong, bullish day on oil. So if you're looking for bullish entries on oil, I wouldn't take the entry now. I would simply wait a day or two for a pullback back into 71.10. That's your daily demand zone. So that would look something like that. Could even happen today. You get a bearish pullback into this, right? You want to see that area hold as support. If that area does indeed start to hold as support, then you can look for potential bullish entries, looking for higher prices on oil. I don't think the down trend has been breached, though. That's the thing. And that's also the thing on Aussie Yen. Let me go talk about that real quick, too. Aussie Yen is in a downtrend, an obvious downtrend. But has the downtrend been broken? Well, it did yesterday. Big, strong day. Boom. So now you can look for bullish entries on this asset. And that's going to be basically the same way as Bitcoin. But like I said the other day, just because you break above a descending trend line, that does not mean that it's automatically going to work as a bullish entry. So there is your descending trend line on Bitcoin. To be safer, waiting for this to be broken until you start to look for bullish entries. Now, earlier on into the week, earlier on into the week, I said Bitcoin could possibly find support here due to a weekly demand zone at 47 to 53 spot 71. As soon as we started trading below that, people took to Twitter and told me how wrong I was. On a weekly time frame, weekly support or weekly demand or weekly resistance isn't going to show a immediate reversal on a 5-minute chart, right? Can it? Absolutely it can. But does it? Not often. Look at this wick, right? Look at this wick. Why would this week be any difference? There is potential support. In order for that potential support or demand level or Heath level to be broken, you must get a weekly close below. Since that won't happen until Sunday, nobody knows if I'm right or wrong. It potentially looks like it is holding as support currently. Currently. You also have this coming in here, right? There is a descending trend line holding price down. There's your breakout. This is the first time that price came back to test that level since breaking away from it. Potential support. And then ultimately we have this other area. Let's get on log. That is not the one I want. Sorry, guys. You think for just one of these live streams I'd be a little bit more prepared. I'm sorry, I have to get up like 2 hours earlier than I typically do to do it. So no, I'm never going to be prepared. All right, so moving on. This lower trend line is an old one. It's coming in all the way from the sell-off that we had in March 2020. Had a nice little tack right there, and then boom, took off. And then this last bout of selling that we had back in April came in and touched that line to absolute perfection. And then there's when you got your bullish pop. So we are back into it again, and I do expect this line to break one of these days, because let's just face it, guys, the higher the trend line goes, the closer that price is going to be to it, then eventually it's going to break down. And you're getting to the point now to where you're testing it again. Now, if it breaks, I can look for more bearishness, at least some follow through to come away from that, right? But I'm not saying that that's the end of Bitcoin. Price doesn't move in straight up and down. It makes waves and it trades sideways. Like most people think that markets always trend. They don't. They only trend typically 30% of the time. So the other 70% of the time, markets are usually going sideways. And that's no different for Bitcoin or any asset for that matter. So this thing could trade sideways at $49,000 for 5 months. So yeah, that means you're going to break down through that trend line, but it doesn't necessarily mean that you're going to see any bearishness. It's not the end all be all, right? It's just there to show you that, that could be a potential area where demand can come back into the asset, because people do buy and sell off of trend lines, right? That's why we keep an eye on them. We don't put our weight on them totally to where we're like, oh yeah, I got to buy that. No, we look for confluence areas with trend lines. We put our weight on horizontal support and resistance, or Heath levels. That's where we put our focus, right? Because they hold way more weight than any trend line. So that's where the confluence is. And then also your RSI is resting on the 50 spot. So Bitcoin can bounce, right? Yesterday on Twitter, I posted that we were at an hourly level, which is important. Hourly level. It's the last one, right? Here it is. This is support on the hourly time frame. This is your last close and lowest close before price trades away from it. Now, price did revisit this area earlier last week, but you never got one close below it. Notice that. No closes. There's your close. None of those closed below that line. Here, yesterday, that's why I posted, because this is potential support. With everything else that we know, yeah, it's potential support. Now, price did reject at a hourly supply zone. We knew about that too. We absolutely knew about that. Right? So yeah, you could have taken that entry yesterday, but you would have taken your profits at the daily low. There's no way to know that price is going to go all the way down and touch that level. Right? And there's no way to know that this was going to hold us support, and there's no way to know that it was going to go all the way up there. Right? You have to pick and choose your battles. That's what makes you successful in trading. Not knowing where these levels are, but picking and choosing your battles. When to take these entries. That's what makes you successful. You do know that these levels hold weight, though. I've been doing this for a year, 1 year exactly, and there's no way that it doesn't work. All right, so let's move on. Bitcoin at that area again. You did get an hourly close below, but then was immediately followed up with a bullish reversal pattern candle, or also known as an outside candle, or a bullish engulfing, right? Holding support at 48,715 spot 20. Ultimately, the target would be this wick here if you were to look for bullish entries. I would not look for bullish entries where it currently is. I would absolutely need it to come back down into at least 48.9 before I would look to get long. So what I'm saying is basically the entry is probably already gone. They're probably not going to see another chance to take a bullish entry on Bitcoin today. Also, Bitcoin is new. It was never around in a high inflationary environment. So we don't know how Bitcoin's going to react to any of this news. All right. This is what we know for 100% certainty. Longer term, if you're looking at your monthly charts, quarterly charts, blah, 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 you're bullish. Here's your monthly chart. It is as bullish as can be. There is no denying this chart is bullish. Here's your monthly demand zone. You are trading above it. bullish, right? Bullish, bullish, bullish. 2-week chart, bullish, bullish. All of them are bullish. You can go out to the weekly. It's still bullish. You did take out the high, but you're still trading above your weekly demand zone. That's bullish. You have not taken out a swing low yet. This is your swing low. So you have a higher high right now. If price leaves from here and starts going higher, you have formed higher low support on a weekly time frame. So what I'm saying is you have a high here. In order to have a lower high, you have to take out this bearish candle's low. So if price were to do that, then we would be looking for lower high support or resistance. And if that were to happen, then you would have a weekly downtrend. Right now, you do not have a weekly downtrend. Right now, as you have is a weekly pullback. On the daily, though, we do have a downtrend. Here is your daily. There's your high. This swing low needed to be taken out. That candle took that swing low out. Then we need a higher or a lower high resistance. Well, we got it there. I mean, and it was just barely a lower high. But it was a lower high, and then you took out that low. High to lower high, then lower, or high to low, then lower high, then new lower low. That's a downtrend. That is a downtrend. So the daily chart is in a downtrend. So please be careful looking for bullish entries if you're below this trend line, right? Hopefully that explanation clears it up for you. In downtrends, pops in price usually gets sold into. I'm not saying that this one will get sold into. I'm simply saying they usually do. And this is no different. You've already bounced off of oversold areas on the RSI, and you have put in a higher low support. So let's move up, right? So basically that's what I'm looking for, but on price, not just the oscillator. But you can see there's your low, there's your high, took out this high, set in a higher low, and then you're moving away. So basically, I guess we could probably, I mean, I don't do stuff like that, but I've seen other people do it for whatever reason. Similar, right? You're looking for price to get above that trend line. Once that occurs, then I would be safer, or in my opinion, would be a little bit better to start looking for bullish entries. So that's what we're going to do. We're going to wait on Bitcoin because Bitcoin's currently testing a level of supply. You did not close above that supply yesterday. If you do it today, that's a different story. But there's supply. You did test it yesterday. You are trading higher or looking to trade back up into that. So, I mean, yeah, I'm looking for it to get higher. I'm looking at it. The market likes the news. So while the market likes the news and it has tons of momentum, it's best to take your trades looking for that momentum. As far as looking for FX trades, Swiss yen looks like you could potentially look for entry there. We did just get out of this range, so that's good. I would be probably, I don't know. I would probably be looking more bearish. Yeah, definitely. That's some momentum there. Let's find the open. There's the open. So we're testing the open now, but where would we short it? Yeah, there's really nothing to do here. I don't see price getting all the way back up to the hourly Heath level at 123 to look for the short. We need something to short it off of. Like if it got back up to there, 123.612, I would potentially look for short entries. But you are above the open, and you still would be above the open at that point. So you'd be trying to take a short on a green day. Trying to short a green day. Typically doesn't work out that often. But we'll see what happens. We'll keep an eye on that one. Next one would be Euro USD. I mean, it's coming in hot now, so we'll see what happens. It just blasted right through that support level, I'm assuming it did. All right, so let's see what happens. If we get back below the open, I will not be looking for bullish entries on this anymore. And to be honest with you, if we close the 30-minute below support, I will not be looking for bullish entries no more either. That's the zone at which I want to take a long. If we cannot maintain closes there, then I'm not longing. I'm not looking for a long. It's that simple. It still looks okay though, right? It's just a deeper pullback. The deeper the pullback it is, it's okay. Also, in some cases, as it gives your risk to reward a little bit better. See, from here to the daily high isn't quite what I want. It's only 15 pips away. So a deeper pullback would do that. But yeah, if it gets below the open, I'm not looking for it to go long. So we'll see. But it's in a downtrend as well. Typically, things in pops and prices get sold into in downtrends. Euro Turkish lira is up 4%. Jesus. That's about all I see. NZD CAD. I hate trading NZD pairs. Just took out daily res. No, that's old stuff anyways. It's in a downtrend. So basically what it looks like to me is it's finding resistance at around the demand zone or supply zone. Didn't quite get it. It was a close but no cigar type of scenario. Yeah. See if it holds support. You're at the open or below the open. So this is going to be difficult because to me this is starting to look more and more like a short than a long. All right, so typically even though you were green briefly, you were green for 2 hours worth of closes. Now you're back under the open. That is the open, correct? It is. So basically what I'd be looking for is I would potentially be looking for that level right there to hold as resistance. So if you get an hourly close above 87,122, then I would not look to short it any longer. But I don't like this one long. Just because of that daily demand zone there. It could still go up there. But it looks better as a short. Or I like it better as a short. Even though the order flow is obviously bullish. I'll tell you what, this one's tricky. Just leave it alone, right? Just leave it alone. Or you can potentially look to take a short at 87,122. I was looking to short Aussie yen yesterday because, yeah, I think that it was essentially going to go up and take out the highs and then roll over. That is not what happened. Obviously, I was stopped out of that. But it was just an FOMC news trade. I was looking for it to get up to here, take out that wick high, and then roll over. That is not what happened. So I was wrong on that one for sure. Yeah, it is just, it's bullish, man. There's nothing to do on it. However, it is into this, so we'll see where it closes and conjecture with that today. That's typically usually just a target. I mean, yesterday, though, it got above all the daily wick highs. And I would just leave it alone, right? You got above this, so you got to look for bullish entries. You are, depending on where today closes, will determine whether or not you close above the 50 on the RSI or not. All right, with that, let me get to the questions, the comments for the chat. Good morning, chat. What's up, all? Good morning, Dr. Obscure, whatever that means. You are welcome, K4 Liberty. Yes, if you wouldn't mind hitting the likes, that would be fantastic. Trade the news? Nope. Trade the reaction to the news. Yes, and we don't know, basically, how the market's going to take anything, ever. We follow price. Brandon Lammy, do you trade the last couple weeks of the year? I know some people that trade during the holidays, but the majority don't. I'm not going to be looking to take entries on Christmas. But the days in the middle between Christmas and New Year Day, Yeah, man, I'll trade FX and crypto markets, even the stock markets, right? Because the type of stuff that I trade is always in the stock market is always open as long as the market's open. It doesn't typically mean like that I need to wait on a specific thing to happen or this to happen, right? It just depends on who's trading that day, what's pushing what. That's what I'm looking for. I look to chase, or not chase, I look to trade with momentum in the direction of the trend. That makes me a momentum trader. But yeah, I will absolutely trade during those days. Some people don't, you know what I mean? That's fine. I don't have to, right? I could have stopped trading this year when I hit that Japanese yen or pound yen trade. I could have been done. But there's not much volume, so it typically makes it a little bit difficult. But that's it. Is this a fake out? It could be, right? But here's the thing: we know that they're not going to start hiking until pretty close to at least the end of Q1. I don't even see them doing it in Q1. I see them watching all first quarter next year to see how the jobs goes. As long as the job numbers are, even though it comes out, non-farm payroll comes out with a bad number, the Fed's number might be a lot lower than what the market's expecting. Does that make sense? So the Fed liked the last week's job number, even though it was a miss. The Fed said it still looked good. If you listen to his press conference, he said the number looked great, so they're going to continue on as planned, and that was the plan. So we'll see. We will see. The markets can absolutely remain bullish all the way up until then. And to be honest, I don't expect the markets to even really get bearish unless they're pushing for more than 2% worth of rate hikes. Ultimately, like they usually do it like 25 basis points. So once they get that pushed up to 2%, they should hold. They start getting much higher than that, the market won't like it. That's just my opinion. Obviously, doesn't matter what the fundamentals say. Price is going to do what price is going to do. But it absolutely could be. What's up, Heath? Good morning, good morning, good morning. Can you wing it? I pretty much always wing it, my friend. Always. Welcome to the bear market, says J. Lou. I mean, it's been bearish, right? The S&P 500 is at all-time highs, so you must be talking about Bitcoin. Bitcoin has been bearish. It is off 36% from the highs. So I don't know what your metrics are to consider something a bear market. As of right now, Bitcoin is trading at 28% off the highs in the standard FX markets and also in the risk markets, the S&P 500. 20% is typically looked at as a bear market. But Bitcoin has 20% pullbacks all the time. Could this be the top of Bitcoin? It absolutely could be. Is it? I have no clue. Am I trading it for that? No. I'm looking for continuation. Bitcoin was built to be an inflation hedge. So once your bigger firms start to look at it as such, then Bitcoin is going to be trading at multiples higher than where it is now. And also, if the FDIC were to ever say, yeah, you can, if the federal government ever lets the banks put Bitcoin on their balance sheets, Bitcoin is going to be super mega expensive, my friend. This guy's good some tactics, Doopy Cash and Crypto Maniac. I don't know what you're talking about. Oh, you're saying that I use the same tactics as two other people? I don't know those people, so I essentially built this strategy over time. I don't know many YouTubers that trade. I follow like movie critics and stuff on YouTube. Best breakdown out there. Smack the like. Oh, you guys are just having your own little conversation, I guess. Good morning. He took swing short on USD CAD at one spot 28441. My target is the monthly low at one spot 26524. Let's go look at it. 128,441. So in this area here. Oh, I didn't even have a damn line. There we go. It's not going to be exact. There it is, 120. You said 28, right? 441, yeah. There's 128, 448. So it looks like you took a short on a smaller time frame based on something. Well, daily res was there. All right, and you're looking for the monthly low. All right, let's go look at it. Nice. Well, you do have a monthly demand zone coming ahead of the monthly low. All right, you might experience a little bit of technical difficulty when you get down there. But I mean, that's not very far from the monthly low. So far, you're doing great. So far, you're in good shape. What you want to see now, with 15 days left to go, you want to see price get underneath this candle's open. I mean, close. The thing is you're taking a short in bullish momentum, right? So I see what you're looking for, what your goal is, and I'm not saying that it isn't going to happen at all. But what I am saying is, this was the bearish part, and then you had a bullish almost engulfing, not quite. Right? You didn't take out the low of the candle, but you did close well above the high. So this pullback right here, this wick lower, all the way down to this open, has to be looked at as a pullback for now. And then bullishness, boom. But we can go look at that on the chart, what it looks like. That's exactly what it looks like it did, right? So let me get rid of this level and this and show you what I'm talking about, the narrative of that. So if we look at this, just keep this in mind, fresh in your mind. So here is price, finds a low, a monthly low, trades higher, 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 has a pullback, and then this bullish candle takes out that pullback candle's high with a close, mind you. You're right into monthly resistance, so a pullback, yeah, could happen. This one traded well above it first. But if you go to the daily, you got that move right there. Here it is. There's the monthly bullish push. There's that pullback candle. And then boom. You've taken it out. So you are right back into this, which this isn't anything. That's the old monthly. Yeah, that's the old monthly res. So old monthly res here. This can absolutely hold a support. So what you want to see, since you're short and you're targeting this down here, that's not what you're targeting. I think it's this. So let's get rid of this one and we'll go back to the monthly briefly, just to throw one on that wick, just to give us an idea. It is that low. Or that's not even the pullback. Shit, sorry, that's a daily. This is the monthly pullback. There's your monthly low. These wicks, those crazy wicks on the monthly are from these things, right? It's absolutely disgusting trading. Big strong candles, completely reverses. There's the monthly pullback, traded up. So this is monthly res. Will it hold? I don't know. But you definitely want to see that break down for sure. You even got a daily close above resistance. So I don't know if I would have taken that trade, my friend. However, with that being said, I mean, the thing is, it's broken, it's downtrend, but it's still struggling at resistance. I don't see a downtrend in there that's still legit. So it's broken out. It's broken out past its downtrend. Yeah, I mean, once it got above this, then I would stop looking for bearish entries. But if the dollar's gonna get sold off because of this news, then guess what? You're well suited to capitalize on that move. I wouldn't close the position because you're well into profits. But to stop it from being a loss, you might want to maybe look to take that stop loss a little bit closer to your entry. But nonetheless, hey, I'm pulling for you. You know I'm rooting for it to go down there. Forex will go sideways after Christmas. It will. It typically does trade sideways. How's ETH for you, Heath? Let's go look at it. I keep forgetting to look at it. I'm mostly a stock and Forex trader, but I do trade cryptos as well. Let's see here. ETH ETH doesn't look nearly as bearish as Bitcoin to me. Right? ETH just now even started making a downtrend. Whereas once this stuff was put in, Bitcoin just kept going lower. ETH did not. ETH came back up and tested that. So there's your downtrend line on Ethereum. You took out support twice, right? You took out this support with this close, and then you took out this support with this close. Same scenario. You are into daily supply. However, the close was good, right? The close was good. You closed bullish on the day, and you closed real close to that. So, I mean, I don't know if I'd look to take a short just yet. And if it got back up there and rejected again, like on a 4-hour basis, I'd probably look to short it. Like if we get a wick through that and then it closes back below it, I would want to see it close back below it and bearish. Then I would look to take a short entry. But not just if it closes and rejects below and closes right underneath it. No, because then the next one's probably going to be the one that breaks it. But yeah, there was some bullish momentum from yesterday's news right into that supply zone, and you can see that it basically stopped price in its tracks. Yeah, the strategy ain't no joke, man. It works. It's the most reactive strategy than anybody else's that I've ever seen anywhere. I mean, who can pick levels like that? Boom. And that's usually where we're taking profits. We're trying to get to take profits at those levels. And if it's an intraday scalp, we'll short them from those levels as well. But it looks like it's at resistance, my friend. If you're looking for it to break out, it needs to break out. It doesn't need to break out today. It could break out tomorrow or the next day. Right? It's at a main level of resistance, so don't take any bullish entries into that level. Right? Don't try to take any bullish entries into that level, as you're liable to get crushed. And this is too close to it as well, I think. But we'll see. 2-hour resistance is lower, and you have not broken above it since you tested the daily Heath level. I don't like that. You did take out a 2-hour close to the downside. So basically, man, which it's intraday price, so it can continue. But if you can't get a 2-hour close above this resistance by the New York Open, this is probably going to have a pullback. This is probably going to have a pullback back down to about $3,800. At which point it could find support and then look for higher prices. Right? Something like that. It looks like the buying has been exhausted at the demand level or at the supply zone. Imagine that. Why would a demand get exhausted at supply? That's because people take profits ahead of those levels. They see that level coming up too, and they're like, oh, gotta exit my position, and then you exhaust the buying. The buying gets exhausted. We'll see if it holds support. Right now, 2-hour support is at 39.87, and that's on a 2-hour time frame. So that means you gotta wait for 2-hour closes to justify a breakage of support or a hold of support. You did just take out the low of that bullish candle. So, yeah, it looks like it's wedging up. Right? There's no point in drawing. You can see it. It looks like a bull flag, right? Watch 2-hour support there. If you're looking for bullish entries to trade the bull flag, then you want to get entries as close to 39.85 as possible. You want to be taking profits when you start to get up into there. Is it now safe to go long ETH? Well, I just pretty much answered that. Where was I at? All right, morning Heath. Could you take a look at LTC? This PA post FOMC. Absolutely, my friend. Where are we at? LTC USD. Could you guys excuse me for 1 second? I gotta go kick my girlfriend out of bed. Alright, I'm back. I love being the spoiler. Litecoin USD. Alright, what's this on? Let's go look at it on Coinbase. That is Coinbase. Coinbase has the most liquidity, or not the most, but it's up there with the top guys. All right. So Litecoin has been predominantly weaker than Bitcoin and all the other cryptos, in this meaning that it never did make a new all-time high. Right? There's your old all-time high from the 2017 gold rush, or the crypto rush. Right? There's your old all-time high. This bullish market cycle, Litecoin never made a new all-time high. Whereas Ethereum and Bitcoin and mainly everything else not only made new all-time highs, they absolutely crushed their old ones. Right? Bitcoin's old one was $20,000. It's trading at $49,000. So right now. So it's inherently just not as strong because of that factor alone. And since the 50% decline on Bitcoin back in April, this put in a supply zone at $281.50. And that supply zone is still intact. You did get a massive wick through it, but it's the closures that matter. Look at this strong bullish day there. Closed right at it. So I wouldn't have taken that short based on that daily candle alone. Because this daily candle alone tells me two things. One, it broke above and closed above resistance. And two, it closed damn near at the level. So I'd be looking for more bullish continuation. However, once the low of that bullish breakout candle is taken out, then I'd start looking for shorts, because that says that this was a trap. All right? So it never did give you an entry in there. But since all that took place, it's trading at the lows. Let's see where it is currently off of this high here. It's off 48%, and that's from this high alone. If we go to the high from April, it's going to be worse. 62% off the highs put in the spring. So, what are we looking for on it? Well, if Bitcoin gets a bounce and starts trading higher, so will this, right? The price action looks almost exactly the same. Candle for candle down here. Candle for candle. Almost looks identical. So whatever Bitcoin does, so will this. All right, this, what it's doing is typically a bullish pattern. I'm not going to sit there and say that it isn't. It is, right? It's a descending wedge. You got your bearishness here. The bear flag should have been broken on this push lower, but it didn't. Right? That would have been your bear flag. So now you're not making a bear flag. Now you're making a wedge, which is typically looked at as a bullish reversal pattern. Right? That's what you got right there. Those are typically viewed as bullish patterns. They break out bullishly. Not all the time. Sometimes. Right? So what you need to do is you need to at least wait for that to happen. Or if you're going to get long expecting that to happen, then you're going to have to go in your smaller time frame charts and look for an area of support. 4-hour support is all the way there. I mean, that puts you right at the wedge, essentially. So I don't like that. But a wick down to this candle, potentially look for support then. If you can find support then you can aim at that, looking for that breakout. All right, but it's in a downtrend, man, and pops in prices usually get sold into. Keep that in mind as well. Like I said, I'm not uber bullish on Bitcoin, especially knowing that rate hikes are coming. Also knowing that the 4-year cycle model caused the tops in December. If the 4-year cycle model is still intact, then people should have been exiting that. If you got long based on models, for instance, let me just put this out there for anybody that's still following models. If you got long based on the 4-year cycle model, then you need to be exiting that position based on that same model, because that model called the last 2 market cycle peaks in December, both of them, right? Since the halving started, the highs have been called in Decembers after the bull market blow off run. And we had the same thing this time too. So typically, I would be looking to exit that position based solely on that model. But I don't trade for models. I trade by price action alone. So, but if that model is going to be intact, you're not going to see another high on Bitcoin. That's not me saying it. That's the model. If it's done, it's done. Stick a fork in it, it's done. I'm not saying that. The model is. But in my experience, what people do is they curve fit models to basically fit their narrative. That's what people do, right? Well, this model no longer works, so I'm going to make a new model that still shows this, that I'm looking for this to happen. I don't like trading like that, nor do I like following it. That's why I stick to myself. I just keep my head under the sand and I trade. Me and the guys, they're not killing it yet, but some of them are doing pretty good, and it's not going to be long, man. It's going to be smoking it quietly. You need this to break out. Need that to break out before you look for it, or look for support around there. But I definitely wouldn't be looking to short it at the lows, for sure. I'd wait for the breakout to occur, then potentially maybe look to get long. Now your longer term downtrend looks like this. We'll take it from that last swing high to there. So to take out this longer term downtrend, you need to get above this trend line. But if you're looking for this pattern to break out bullish, you need to at least get above that. But it's going to do what Bitcoin does, guys. Whatever Bitcoin does, most of these are going to do it, especially the majors like ETH, Litecoin. They're going to do the same thing. Thanks for everything. Really informative. Do you mind looking at ADA and AVE, please? ADA, Cardano. Let's go look at Mr. Cardano. It wasn't looking so good. Man, it's not. Damn it, man. I can't believe I missed all that. I didn't miss it. I just wasn't wanting to take it. So from high to low, you're looking at 61% decline. 61%. It's currently trading at a 57% loss from the highs. And that is the all-time highs. Guys, this market's done, man. Dunzos. I thought it was Dunzos over here. No, you did get one last final push-up. New all-time high. And what happened after? What's the narrative? Off 60%. Be careful. Be very, very careful. Now, can you trade this stuff? Absolutely. But the fun, easy, just buy and hold and watch my account double and triple and quadruple in a period of 3 days, is that going to continue to happen? Nope. Now you're going to have to get it. Now you're going to have to trade for it. Welcome to my world. No, I'm kidding. Yeah, we can trade these. We can trade the bounces. Some woman posted on Twitter the other day, how do you trade in a bear market? You buy dips and you sell rips. That's how. So buy dips, sell rips. Yeah, look for a bounce because it's off 67%. Looks like you have found support, and I don't see currently anything that it found support off of. I guess it would be that, but there's literally nothing. Well, there it is. That bullish candle right there. Squeeze it in there. So there's your support. Bullish candles have the potential to be support, but which one is impossible to know. You have to let price tell you where support is. We know price is saying support is 1.20086000000000. So basically, you're in a downtrend. There's nothing to do on this just yet. I mean, you could put this downtrend in a million different ways, and you're still going to come up with the same data. You're physically in a downtrend. So here's near-term resistance, is daily res, there, and you have supply there. So those are two potential zones to look for potential sell-side activity to come back into the market. But being this sold off, I wouldn't be looking for that play. I would be looking for a high and then a higher low. And then I'd be trying to attack that higher low somewhere for a potential bullish move to the upside. Because even in bear markets or downtrends, you can have massive, massive bullish pops, right? But those are typically going to be looked to be selling opportunities. So we'll see what happens. But I mean, it got absolutely. It's Dunzos. AAVEUSD. Coinbase again. Same thing. Absolutely. Oh man, this one's even worse. Just do it like that. So from this swing high, which was an absolute selling opportunity, you are off to the low 65% from the all-time high. Where are we at? 73%. So I mean, it's at a discount. If nothing else, it's 73% off. So maybe look to buy a small piece of it, but don't look for new all-time highs. Look for like legitimate targets. Like next resistance is there, and then next resistance is there, so on and so forth. Right? 203.80, 203.93, and then this one is 177, 181.25. Sorry. Yeah. It looks bad, man. Doge, look at Doge. Doge got a massive pop thanks to Elon Musk the other day, and that was the sell side. Look at that. It retraced all the way back down to the demand zone. That's bad. And you closed right back under the daily downtrend. So people sold the snot out of that. They were like, yes, big bullish pop. Yes, I can sell. And they did. They did. Now, if it breaks out above that downtrend on a daily closing basis, then look for bullish entries. Look for those dips to buy. But make sure you're taking profits on the expansions up, because you don't know where it's ultimately going to find resistance again. And it will find resistance again if the market's done. Good morning, good mornings. Can you take a look at Super USDT on Binance? I've never even heard of that. Let's see, SUPER USDT on Binance. It looks like I've looked at it before. I mean, it's off pretty big too. That's not, yeah, that's April 21. Where are we at? Reference to that. Not as bad. Oh, way. 71%. It's worse. It's worse. It looks like you got something going on here. Potentially. Right? So keep an eye on that. I mean, they were looking at it like this until that broke down, right? That's how it was being looked at. This is why I don't like using trend lines. They're so subjective. They were looking at it like that, and there was the breakdown, so then they brought it over here like this, and now it's like, oh, that was support. All right, so it is, and you did break out above daily res as well, so you do have bullish momentum. Look for selling to recommence at 1.54, so that's about where I'd be targeting if you did get long on this pullback here. I mean, this day essentially tested the midpoint of this range there. Or if you want to look at it like that, it retested old support. And you did get a little bit lower than old support, but that's just the run on stops. So people got long there. That's one final push to stop them out. Boom. Bullish continuation. Today, all you've done is you just had a small push lower and you're trading in a range. Really tight range. So if you're looking for bullish entries, if you get back down that low, maybe it'll hold as support. I wouldn't look for bullish entries until I got about there, 126. We get down to 126, then I potentially start looking for bullish entries. Absolutely, it's not far from where current price is either. Hourly support is there, not much further down is daily support. See if this area holds on a 4-hour closing basis. If it does, look for bullish entries, and you're only targeting 153, as that's going to be the next zone to the upside. Because if you're looking for more, I mean, you can keep a small piece on just in case this thing does a 5 million X, right? If it does, then you'll have 2/3 or a quarter of the position size still left on. You still can capitalize on that big move. But the majority of your profits you took on as a resistance test. And if you just learn to get that down pat, you'll be fine. Because learning to become a profitable trader is about being consistent in the way you take entries. You got to be consistent in the way that you take entries and the way that you exit trades. Once you have a consistent plan in place, then you can make tweaks to decide what parts are profitable and what parts aren't. But until you're taking the same kind of trade every single time with the same kind of exit every single time, and you get enough data to basically backtest and say, well, now I'm consistent in the way that I am executing positions. Now I can start tweaking things to bring on profitability. But you must reach consistency first. All right, guys, with that, I'm going to say good evening or good later or goodbye, because I got to jump off here real quick. We got to start finding some positions to get into. If you're new to the channel, welcome. If you have any questions, just drop them in the comment section below, as I try to answer every single question. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.